we're super excited to have a special guest today, Dave Lacusta, Ziva Mortgages, 20 years-ish experience.
Yeah, unfortunately, yes. Yeah, I started when I was about 9 or 10, so...
Well, that's what I thought.
Yeah, exactly. No,
Well,
I'm happy to be here.
Hey, we're super excited to have you. Thanks for joining us. Dana and I really appreciate your time. Today we're going to be going over some mortgage questions and some of the most common things that people are asking about what's going on in the mortgage world. And we brought the perfect person to do it.
Well, if I can shed some light on some things for everybody, I'm happy to do it. So thank you.
So first off, what is the difference between a broker, mortgage broker, and the bank?
Ooh, how much time do you have?
As much as you need.
There's a lot of reasons to work with a broker over a bank. Probably the biggest sort of one that we see that's more encompassing is sort of the structure of how the banks work compared to the structure of how an independent mortgage broker works. Bank employees are just truly that. They're employees. Mm-hmm. Their responsibility, sole responsibility is their employer, which is the bank, which is, as we all know, banks are based on profit, based on margin, based on their shareholders. They have to answer to shareholders. So as much as that bank employee wants to do the best they can for the client, they're restricted by the bank's profitability, essentially.
Yeah.
If you work with an independent mortgage broker, like me, for example, we don't have that restriction.
Right.
Our responsibility is to the client, and that's
Right.
it. So we're sort of evolve as the client evolves to make sure the experience is good, and that encompasses everything with rate, everything else. The other thing with the banks is they have a singular product that they can offer, where we have numerous products, numerous lenders. Not everybody fits into that box of just a AAA bank mortgage, right? Not some people want different. We have better rates sometimes in the banks based on the amortization and based on the client's sort of overall sort of scenario.
Yeah. You're able to look at the whole picture and sort of get the right thing for your clients.
Yeah, exactly. No, thanks for mentioning that. And I think one of the bigger ones on the client side is really the process.
Right.
We're a little bit more available than the banks, depending on what
Which we so appreciate.
Yes.
Yeah, depending on the structure, I have a big team of like 11 employees, so it's a little bit different in terms of my process with my clients, in terms of sort of how encompassing and how big so that we make the client experience. But we do everything in-house in terms of goal setting with the clients, all finding out exactly what they need, and then all the way through the process to underwrite the file till it's complete. My team does it all. So the client sees the same person doing the same thing with the banks. Unfortunately, based on the level of profit and sort of that they require now, they have streamlined their process where you get, I hate to say it, but like more of an application taker at the front sort of desk that you meet.
Yeah.
And then that once your mortgage once you have a live deal, for example, it then goes to an adjudication center, which is a main center.
And they don't know who you are from.
Right.
They don't know your goals. They don't know any of that stuff. They don't work with the realtors like it.
Yeah. So
you guys experience that. You would know.
If we can just nutshell it, you work for the client, the bank works for the bank.
That's right.
Exactly. So the next question is, how do you get paid? How is the monetization for your services done?
That's one of the other, probably the biggest questions that our clients always ask. They don't know that situation. And we get paid by the banks. So we get a finder's fee from a bank or from a lender to bring them the client.
Right.
It's really about the same with almost every lender. And it's about 1%, basically. Okay. So if you have a mortgage, $500,000, the commission is approximately $5,000 that comes to my company, and then it gets dispersed to my employees like any other business.
Right.
And we disclose that to the client.
Yeah.
We let them know how much we get paid, and it doesn't always be. It can be less, it can be more.
Yeah.
Some lenders pay more, some pay less. But for us, with our commitment to our clients, it doesn't matter how much we make.
Yeah.
It's it's the end result for the client.
And
it's critical.
The bank sees that as paying you the commission, I would assume, because they're not doing any of the work. They just get the deal packaged and put together. They just hit the rubber stamp and go from there. Is that how that works?
Yeah, exactly. I mean, they do have to. The banks the lenders still have to underwrite the file once they get it. But the reality is, they want that client for future. They want, banks don't make a lot of money on the initial 5-year mortgage, but they do make it on renewals.
Right.
A lot of times the clients will stay with them on a 5-year because it's easier.
Well, and if they've had a good experience, which I think a broker can give versus someone at the bank often, then they are likely to continue on if it's been a good experience.
Yeah, and with some of our chartered bank lenders like Scotia and TD and stuff, they're going to try to get that client to bank with them. So there's some
Right.
That makes
incentive.
sense, right.
There's a lot of incentive there for
Yeah.
the banks to do those things, and Scotia and TD are extremely big in the broker channel
Right.
because of
Right.
that.
Yeah.
And there's one thing I can mention from a real estate realtor's perspective, the difference between banks and mortgage brokers is that we as realtors really need to have that line of communication with the banking system, because it's essentially a team we put around ourselves, whether it's the lawyers, the accountants, the mortgage brokers, and the inspectors. I mean, that's a team that we bring around our clients. And unless we have good communication,
Yeah.
we are not able to service our client at the highest level. And I find,
Absolutely.
that working with brokers means that we have that direct line of communication, and we get things done. And when things are difficult,
You're working
there's-
together.
You're working together. There's more communication, and things can happen faster.
Yeah, we have a responsibility. We truly feel that we have a massive responsibility to ensure the client experience is exceptional for the client, outside of getting them the best rate and the best product. But we also have a responsibility to our lending partners, our realtor partners, like you, to make sure that we can produce. So you have a competitive edge,
Yeah.
and that we're allowing you to do your job. And that's, I think, what you mean by saying that there's so much of a difference. You'll never be able to be aggressive with the bank.
No.
And we have about 40% share of mortgage.
I mean, we
right now.
try not to be too aggressive with you guys.
Wow.
Are you done yet?
The reality is we have about 40. We only have 40% share of the market of the
Right.
mortgage business. Banks have
Yeah.
about 60. And people go to the bank because their parents went to the bank, because
Yeah.
they bank there. They just sometimes don't think of the mortgage broker sort of option.
Yeah.
When if you work with a good professional one, there's no comparison.
No,
Oh, I fully agree with that.
I fully agree with that as well.
All right, so the next thing we'll talk about is questions. You must get questions that come to you all the time.
Never. They don't ask anything. Yeah, of course.
What
yes.
are the typical things that you're hearing?
Well, that varies. It varies sort of not year by year, but sort of season by season, depending
Right.
on
Yeah.
sort of the landscape of,
What's
of the
happening.
economy
Yeah.
and what's going on.
Yeah.
Right now, so I'll give you a couple different ones now, and I'll give you some that we always get.
Yeah.
But
Yeah.
right now, we're getting a lot of calls on, should I lock in?
Right.
Should I stay in my fixed mortgage?
Right.
Fixed or variable?
What the hell's
questions.
going on?
Yeah.
Right?
Yeah.
Yeah. So we can maybe touch on that a bit later. We get, how long can I hold my rates for
Right.
now? Because rates are rising.
And
so
what's typical?
120 days.
120.
Okay.
Yeah, we can get rate holds for 120 days. And we can do a lot of creative things with that by getting a rate hold at a lender, and then a few months in, we get a rate hold somewhere else if we want to extend it out.
Right.
There's some things we can do to sort of protect the client in a rising rate market,
Yeah.
which we haven't seen in a while, and we're definitely in it now. So
But it's also, don't you think, it's so important? I think a lot of people are freaking out over the rise in the interest rate, which does make sense because it definitely affects affordability. But it also, if you look at the whole picture, is still fairly
yeah.
cheap money.
Yeah.
Historically,
Yeah.
historically cheap money.
Well, I mean, if you look at a year ago,
Yeah.
you could get a discounted fixed rate.
1.5%.
1.5%.
1.7.
Yeah.
So
Like
what
free money.
what I'll say about that is
Yeah.
this. We're in a very sort of unnormal, if I
Yeah.
can say it that way, very unnormal time
Right.
in our lives, and in the mortgage business and in finance. We're in a very uncertain and sort of, we haven't been here before
Yeah.
with the pandemic and stuff. So what becomes not normal
Right.
becomes normal. So when you're
Right.
when you're sitting at a 1.5 or 1.9% interest rate for a year,
Yeah.
that becomes, well, that's what
That's
they are.
the norm.
That's what they are.
Yeah.
Even though
Yeah.
before the pandemic they were at 4.
Yeah.
But you think now that's the norm. And so
Yeah.
when they go up back to 4, you go, what's
What?
happening?
Yeah.
Yeah.
Why are they so high when that's where they are?
Yeah.
So it's more of a
It's
emotional
just-
kind of roller
that's
coaster
right.
ride
Yeah.
when it comes to that. So
Yeah.
Building a bit of perspective.
Yeah. And I guess a lot of those too are first time home buyers who that's just what they know.
Yeah.
Right?
one of the other biggest things about, and since we're on the topic and just quickly on rates, is that, and sort of the economy, is that there's just a lot of information out there. A lot of it's not accurate, and a lot of people don't know where to look
Right.
to find that information.
Yeah.
And so they panic or they get nervous because they don't know.
Right.
And there's a lot of unknown in our business, and so, and maybe we'll get into that a bit later. But my comment always is, talk to someone you trust,
Right.
that you know.
Well,
And-
talk to professional.
Talk to a professional.
We reach out, we spend probably 70% I spend 70% of my time talking to clients about their current situation.
Right.
Almost,
Right.
I'm on the phone or in meetings,
Yeah.
7 hours a day based on that alone.
Yeah.
Because there's so much uncertainty
Just
right
uncertainty.
Right.
Yeah.
Okay.
Yeah, fair enough. Absolutely.
All right, so this is one that I often have questions around, and I'd like some clarity. So you're going to help me on this. I don't know the answer to it. When they talk about Bank of Canada meeting every quarter and decisions to raise rates or not, how does that Bank of Canada rate relate to like variable rates, that mortgage rates that are going to go up or down, and how does that relate to fixed rates? Like what? Like
Yeah,
how
it's
do
really
they- how
confusing.
do they
You're
do
not.
that?
You're not. You're amongst the majority in,
Right.
in that
Thank
regard
God.
in terms of in terms of
Okay.
in terms of how that works. They don't make it very clear.
Right.
So what happens is you get media that says rates are rising.
Right.
That's it. 80 to 90% of the time that you hear about some type of rate decrease or increase is almost always about the Bank of Canada rate, which is always fixed to the variable rate mortgages.
Right.
So if you have a fixed rate mortgage, you rarely get information in the media about what's going on with that rate. But when it comes to variable rate mortgages, when it comes to specifically the Bank of Canada rate, there's two rates. That's where it gets confusing.
Okay.
So there's what's called the Bank of Canada overnight rate.
Okay.
So overnight rate is the Bank of Canada's rate that they set.
Right.
That rate, they then provide that rate to the banks, and then the bank's rate is called the bank's prime rate.
Right.
So the bank's
Okay.
prime rate is what the clients really only need to understand. That rate
Yeah.
now is at 3.2%.
Okay.
Right? It was at 2.45% before we saw 3/4% increases over the past bit.
Right.
So it's at 3.2%. That's what the clients need to understand. So it's called a bank prime rate.
Right.
So the difference between the two is the
That's what
spread.
they're lending on.
That's their lending on.
That's the mortgage
Yeah.
lending rate.
Any discount they get off of that is based on the bank's prime rate.
Okay.
Right.
That's
Yeah.
how it works.
Okay.
So the other stuff, when Bank Canada talks about their overnight rate, that's just the rate that they're changing,
Okay.
and then they provide it to the bank.
And of course, when the Bank of Canada overnight rate goes up, that's going to make the prime rate go up.
Anytime that the Bank of Canada is going to raise rates, all the lending institutions will follow suit with the exact same rate hike.
Right.
Yeah.
Okay.
Now, based on rates, there's variable rate and then there's fixed rates.
Right.
Fixed rates they don't change based on the economy like that. They don't
Right.
change based on the Bank of Canada rates. There's 9 announcements. I think there's 8 announcements a year on the Bank of Canada. It's every 6 weeks. Is
Right.
is
Right.
when
Okay.
they make an announcement.
Okay.
They don't always raise them. They don't always.
Yeah.
They're going to for a while now, but so that's how it affects. That's how the rates kind of work in terms of when the Bank of Canada. If you're in a variable rate mortgage or your line of credits or any type of variable product that you have, it will increase or decrease based on the Bank of Canada making
Right.
their announcements.
Right.
Okay. So another big thing that, especially in the market that we've just had over the last couple years, with all the multiple offers
15
and well, yeah, it is true
Yeah,
actually.
yeah.
I mean, I would say in my 20 years doing this, I would say majority of that 20 years has been dealing with multiple offers, with a few little blips here and
Correct,
there
yeah.
where we get a little break for a few months.
Yeah.
But anyway, so on the topic of subject-free offers, obviously, on our side, unfortunately, it's the only way to win for our clients. So we're obviously trying to do all the due diligence prior to, but how do you handle subject-free offers?
Oh, we love subject offers. We absolutely love them. I don't know if you could sense the
Yeah.
sarcasm.
Yeah.
No sarcasm
I'm
at
laying it
all.
on pretty thick. We are, as mortgage brokers, we are worst case scenario people.
Right.
We are like doomsday people.
Yeah.
We always, in terms of trying to protect the client, we have
Yeah.
to look at all the
I mean, huge
bad
amount of
stuff
risk,
that can
right?
happen.
Huge
They're
amount of
massive
risk.
risk.
Yeah.
Massive risk.
Yeah.
So with subject-free offers, which, I mean, I've probably done 500 of them at least, maybe more than
Yeah.
that. And just so you know, I didn't like any of them.
No.
I didn't like any of them to do them. But
Did you sleep at night?
but we understand the importance of
Yeah.
being competitive.
Yeah.
And especially in this market.
Yeah.
100%. You're right. So
Yeah.
so we have developed a very thorough process to
Okay.
ensure the highest level of success
Right.
to
Right.
protect our
With the
clients.
least amount of risk.
With
Yeah.
the, yeah.
Yeah.
Okay.
So that's what we have done. But speaking general, a really good mortgage broker, and for sure the banks, but a really good mortgage broker is going to try not to do subject free. They're going to try and have the client go in with some type of subject.
Yeah.
We know that that's not a possibility
Yeah.
in the Vancouver market almost ever. You're right.
Yeah.
So what we can control is we can control the mortgage approval side
Right.
with a high level of certainty. I don't want to say 100%, but very, very much close to 100%.
So the client, you can ensure that the client.
So what we do on our end
yeah.
is we ensure that the client is approved for a certain amount to make sure that they can be approved for that purchase price, for example.
Yeah.
And we have all their documents. We vetted all those documents.
Yeah.
We don't have a concern there. Where the risk is always, where the risk lies always with subject free offers is the property.
Right.
Right.
And because the lender has not viewed the property, the lender has not approved the property, they have not seen any property documents.
Right.
They will, no lenders across the country will look at any property documents until there's a
They're
live
actually
offer.
ready to.
Until there's a live offer.
Right.
There has to be an
right.
accepted
Right.
offer.
Yes. Yeah.
So here's where the dilemma is the client is approved for the actual money that they need to borrow to buy
Correct.
this place,
Correct.
but the bank hasn't seen the property, so therefore the bank hasn't approved that property. So the
Correct.
risk is that if you write a subject free offer,
that property better be.
that property better be
Solid.
approved.
If there's a problem with the property,
Yeah.
All right.
it can get declined.
Yeah.
Okay.
So that's where you depend on us.
Yeah. So I guess from our perspective, we need to make sure we're bringing you
Yeah.
a property that shouldn't have those issues.
Yeah.
Such as water ingress issues or any type of environmental issues.
Yeah,
like
asbestos disclosed on the property disclosure statement.
oil tank
Road inflation.
or oil tank
Yeah.
issues. So from our perspective, we need to really make sure that if we're gonna send this, we're confident that the bank should be okay with the approval process.
Yeah, exactly. And most times, if you're working with the right mortgage professional, you have a partnership with that person, you can get through most of those things. They're fairly generic. We can advise you on what lenders look for, and
Right.
then you can advise your clients if there's an issue with the property based on yours. We can't comment on the property
Yeah.
because we're not experts.
Because that's not.
and that's not our job.
Yeah.
You can do
And
that
you
to the
often
best of
haven't
your
seen
ability.
you haven't seen the property either, other than
All we've seen is the documents,
online.
right? And
Yeah.
we only look at the documents. All we review is the documents that the lender reviews to make sure that we have the right documents sent to lender, but we can't comment on those.
Right.
A lot of times clients will ask us, hey, well, what do you think of the MLS? Or what do you think of the PDS?
Have you read the
And we say we can't comment on it.
Yeah.
You have to talk
Talk
to
to
your
your
realtor about
realtor.
that, which is
Okay.
very important. But that being said, we just make sure that we have a backup plan for the clients.
Right.
Okay.
So we
Contingency.
make sure there's a contingency plan. We can if something does unforeseen happen, we have private financing. We get parents involved. We do co-signers. Like there's ways to
Right.
do it to make sure to protect them if they have to.
So they're not in trouble.
And sometimes we just say you can't.
Yeah.
Right.
And we would rather do that and risk a relationship than have a client be in a serious situation.
Well, I mean,
Yeah.
you're obligated to purchase $1 million property and you
Yeah.
can't.
Yeah.
There's some
There's a
significant-
problem.
There's some big risk in that.
Yeah, and I mean, we, not to be boastful, but we have never had
Oh.
we've never had a client default or
Yeah.
not be able to close on a property.
I know.
Because we've been.
We haven't either.
Knock
I'm
on
just gonna
wood.
knock on
Yeah.
wood here.
Yeah.
And then we never will because when we get to the point if there's any type of risk whatsoever in there, we're going to tell the client they can't do it.
Yeah.
Right.
And then that client's going to make the decision on their own.
Yeah.
Yeah.
If
of
they-
decide
and with their
based
own
on the
risk.
information,
Yeah.
they decide
That's right.
what to do.
Yeah.
Yeah.
So it totally makes sense. So I think at the end of the day, it's the financing is going to be approved in terms of their numbers and their ability to borrow. The cautious or the risk that we need to take
Yeah.
into consideration is that property to make sure it's the right one.
Yeah, and caution anyone watching this video or any clients, just make sure you're working with the right person because a lot of
Yeah.
professionals on the mortgage side will not. They'll say you're fine and they don't know.
Yeah.
And they don't know. And
Really?
Oh yeah, a lot. They don't look at the documents. They don't.
Really?
A lot of brokers, a lot of banks don't ask for documentation up front.
Right.
So a lot of
After.
times they ask for it after because it's more work. It's
And
more cost.
and it's not a deal yet.
And it's not a deal.
Yeah.
That's
so,
right.
So why would they put the work into
Right.
it unless it's actually a deal?
And a lot of mortgage
Totally
brokers do the
makes
same thing. They
Right.
won't do it, right? So if you don't have that level of commitment to your clients, then it's not going to work through that way. And we've
Yeah.
procured this system for 20 years essentially.
Yeah.
So we know what works.
Yeah.
Even though it's a higher cost to us to do it,
Yeah.
it's the only way to do it.
Yeah.
Gotcha. All right.
Yeah.
Well, great.
Okay.
All right. Well, Dave, really appreciate you joining us today. Some pretty insightful
Oh,
information,
awesome.
and I
Fantastic.
learned something too. So
Yeah.
that's fantastic.
My pleasure. Thank you.
So appreciate it. All right. So if you like what you see, hit the like button, and of course subscribe if you want to see more.
And share.
Yeah, share.
Yay.
Send it off to your friends if you think they'd like it.